With the crypto boom in the last 5 to 10 years, why did it take until January 10th, 2024 to finally approve a Bitcoin ETF? Well, with all ETFs, which stands for Exchange Traded Funds, there's a lot of regulation that goes involved with any type of security or any basket of securities that a lot of ETFs hold. And with something as volatile as crypto, there'll be many more regulations to come. What does that mean for the average investor or someone interested in buying these crypto ETFs? Really, just that a lot of risk is involved, and you should do your research before buying. And what is so unique about this ETF anyways? Doesn't it just track Bitcoin? Well, that's exactly what it does. The underlying asset is Bitcoin for the spot Bitcoin ETFs that were approved. And the problem with owning these is that you will pay a fee for how the ETF is managed by the company that originated this ETF. That means for every $1,000 you have invested, you'll pay a $2 fee annually. And although there are notes here waiving fees for first 6 months or the first billion in fund assets, that means that if it doesn't hit that threshold, you will be paying fees. So what's the benefit of holding this compared to just holding Bitcoin? Well, the real difference is that if you hold an ETF, you don't actually own the Bitcoin. You just own this security, which price is based off of their holdings in Bitcoin. So you don't have the actual asset, which there are pros and cons to, but if you're going to pay a fee for it, there's no real incentive to, other than if you're a little shaky with buying Bitcoin directly, either from a crypto exchange or even through Fidelity or Robinhood. And that makes sense, as maybe a lot of the older folks who've been investing for a while are a little bit scared or intimidated by crypto. And if that's the case for someone, then these ETFs do make sense in buying if you want some shares. But the problem with traditional ETFs, and if we take a look at some of the most popular S&P 500 tracked ETFs that are based off the S&P 500 benchmark index, and here are some of the most popular ones with VU, SPY, and IVV. I personally invest in VU, which is Vanguard 500 Index Fund, which has a 0.03% fee, which means you'll pay $3 on every $1,000 you have invested per year. And these are some of the largest, if not the largest, with close to 400 or over $400 billion in total assets. But why these are so popular and why most people invest in them, and you should too, is that they are very transparent, as they have to be with what they hold. As you can see, the top 25 holdings, most of their assets, this is as of December 31st, 2023, are in Apple, Microsoft, Amazon, and this accounts for 44%, the top 25 companies, but they actually hold 505 total companies, which means it is a diverse holding. And if a company isn't doing well, they will kick that company out of their holdings and buy a new company. And so it's very easy to only have the best performing companies in their holdings. And here's a quick sector allocation of technology, financials, consumer services holding the most, with healthcare, industrials right behind. And this is for over 99%. They have some various other holdings that would account to the 100%. So with this documentation and also knowing how well they do, as S&P 500 is the standard for investing, and always betting on the market is the best way historically to return funds, why would you spend money putting it in crypto? Well, just for the speculation, I do think it's a good idea, but it should be a small part of your portfolio, and you should always take into account that that could drop and gain a lot at any time, and is much less risk adverse as to holding something like an S&P 500 tracked index. And to touch on a few other Bitcoin ETFs that were approved, they are strategy. So that means they'll be investing in Bitcoin futures, which is derivatives trading, in essentially betting on the future of Bitcoin, which is also just more risky, but the underlying value of those would come from Bitcoin itself. Or ETFs that are investing in Bitcoin mining, or Ethereum, futures, and a few other things. But the problem with these is that they aren't diverse. Although Bitcoin is the main way to track the overall crypto industry, if you'd want to have a diverse portfolio, then you would need a couple other of the major cryptocurrencies bundled into one ETF. And since these are spot ETFs, that means they're actually just tracking the price. So if you are interested in buying crypto, I would go to Fidelity or Robinhood and just buy crypto straight off there instead of putting money into a ETF that will be actively managed and have a decently high fee just for tracking Bitcoin. And the fees for the Bitcoin futures are higher because they're more actively managed and do have to take into account the ups and downs of Bitcoin a little more than just tracking the actual price. And so to close out the video, my opinion would be that buying a crypto ETF is not worth it at this point in time. This was filmed on February 19th, 2024. You'd be much better off just buying crypto from some of the mentioned exchanges and to still only keep a small percentage of your investments in that and invest heavily into total market ETFs like S&P 500 ETFs.